Love it.
Yeah.
All righty, guys. How are we doing, everybody? I think we are live. Stephen Palmieri coming to you live with expert witness. Can I get a witness with Doug Miner and Stephen Palmieri and special guest Ali Zain coming to us from the great Republic of California? Both of you guys. How are y'all doing today, Doug and Ali? What's going on, guys? Say hello.
We're trying to evade taxes, bro.
All right, right. We'll come to Texas if you want to evade taxes. That's no taxes, Texas. So anyway, for those of you guys watching us, obviously we do this for you guys, and feel free to post in your comments down below, interrupt us, chime in. That's what we're here for. So we're gonna have an amazing show for you today. So Ali is our guest, and he is a CRO, just like the rest of you guys in here, credit repair organization, but he's in California, and there's some nuances. So this is what makes me jealous about California. There's really nothing except for your weather that makes me jealous, especially not the high taxes. But what Ali is about to say that he can do that I cannot do in Texas makes me jealous. So Ali's a credit repair company, but he has the ability as a non-lawyer to legally represent people like in, I guess, what we call a small claims court, huh, Ali?
Yeah. So basically, what is in small claims court, what happens is people, there's no outside attorneys involved, and you can't really go ahead and represent anybody. The client has to come, but we basically empower the clients to help them with the filing and get a case through small claims. And the key here basically is that a lot of these creditors are fish out of water because they have no process to go ahead and tackle small claims. Like for instance, Capital One, they've never showed up to a small claims hearing ever, because they just don't know what to do there, and what have you. But then there's some creditors that are, a little bit hip to it, and whatnot. But the thing here is that, this is kind of like one of those niche-y things where, it's really easy for a bank to write a check to defend themselves. But when they have to send an employee to court who doesn't understand the process and what have you, they don't know what to do. It's almost like sending your, paralegal to court to defend you. That's not what their job is. Their job is to basically go ahead and, help the outside counsel that they've hired to defend themselves.
Yeah. So let's just go ahead, Doug. Go ahead, take the thing away, man.
Set these people up and they go to court. Like, are you there holding their hand with them, and who's coaching them on what's going to come up?
Yeah, so basically, like, there's a couple of attorneys that I work with that'll basically give them some kind of primer on what needs to happen, right? So, and if they understand kind of like we're not going after something, we're basically dumbing it down. We're not going after FCRA and CCRA violations as such, right? We're basically going on negligence claims and what have you. And, a client comes to me and says, listen, I've tried to set up an auto pay with these guys for the longest time. They kept on kicking me out, right? Now what would the client do in that sense? They would basically go ahead and we'd ask for a website system log, right? Which normally they don't keep past the 3-month period, and so forth, and multiple other things as far as call notes and statements and all interactions, all updates sent to to the credit bureau. So kind of with this, it would be getting the story from the client and then just making this as simple as possible as we can and not making it too technical. And because if you basically go ahead and, Chase loves to do this, right? You basically go ahead and say this is a credit reporting issue, boom, they remove it. They're able to get a federal order and remove that claim from small claims to federal court. And then, we're pretty much, fish out of water at that particular point.
So let's kind of back up for a second here, though, kind of bring this thing up for everybody. So you're a credit repair organization, obviously. You're a CRO, and you take on people with bad credit. But because you live in California and the way that the laws are, you're able to essentially file small claims cases for these folks, right? Like that's just the high level, right? Which in California does not subject you to the unlicensed practice of law, which is really totally amazing. So you're able to take your skill set and your license as a CRO and help people, give them advice and assistance to help them improve their credit. And you're able to couple that up with the way that the laws in California are, and you're able to file small claims court So
Yeah, absolutely.
okay, so for folks watching, if you're in California, reach out to Ali, and man, you guys can team up and partner up. I mean, that's a pretty cool thing. And so because it opens up a whole other toolbox of ammunition that you don't just normally have as a CRO. So let's kind of go back in. So you said you're not really using FCRA and FDCPA. Maybe you'll do like negligence or things like that, but like not to get down in the weeds and stuff, but obviously the FCRA really, it kind of prohibits you from suing for negligence and defamation and invasion of privacy unless you can assert willfulness or So if it is some way related to a credit reporting issue, but you're not claiming it under the FCRA, but if you're saying you defamed me by this thing you put on the credit report, so I guess there's two parts to my question to answer. So I guess part number one is you're saying, well, some of these companies, they just don't even show up in small claims court. Okay, well, that's one answer. But then for the ones that do show up, wouldn't they say, well, this is on the credit report, and in a roundabout way, it should be FCRA, even though you're not arguing FCRA. And so we're going to try to get this thing, removed to federal court. Like, how do you frame it around negligence and stuff when it's credit reporting, but
that's up to the judge. They can't, we don't put, that's up to the judge to decide. So we don't go, and that's a very good question. Small claims, man, like it's like the judge is the law, right? Basically, and it's like on what side of the bed the judge woke up on is important too, because I've heard of a case where the judge ruled favorably for a certain case, and the exact same case came, again, and he ruled differently. Yeah. And I was talking to another LDA, and he asked the judge, he's like, hey, why did you rule on this last case of mine like this and this? And the judge was like, this is small claims, baby. I can do this.
The other guy contributed to his re-election campaign, and the loser did, right?
Right, yeah, absolutely.
Just joking, guys. That's not how the judgeship works. It doesn't work like that. So, but anyway, okay. So what does it take to be able to get licensed in California to do what you're doing? What's involved with that? If somebody's watching and they're in Cali, how you
need to have 2-3 years of, work under an attorney, filing suits and so forth. And luckily, I had that kind of experience. So it's almost like kind of becoming paralegal-ish, but they have as a matter of fact, it's ironic we're having this conversation because yesterday I actually I was up for 3 hours filling out my renewal package for the LDA license as well too. So the Superior Court, you get the licensing from there, and they have, they want you to have a bachelor's degree and 1 year of, some kind of apprenticeship under an attorney, or, if you don't have a bachelor's degree, I believe it's 2 years, for that matter of fact. But but I think there's some ways around it that if you're, you could also say if you've been doing credit repair or what have you, that may, that may end up being helpful as well too in getting your case through, with the Superior Court. But but aside from that, there's no exam to put in. It's just these requirements that you need to have. It's almost like in California, you could actually sit for the bar without actually having gone to law school.
California, that's one of those cool states. Like if you don't live in Cali, they have these law schools that do remote online. Because I've kind of looked at that. How do you get a law degree when you don't really want to get a law degree? Well, so California, it has these online law degree courses and stuff from these universities, which I'm not sure if they're really accredited or not, but it doesn't matter because then you can sit for the California bar. And then once you get the California bar, then you can just basically get it reapplied for whichever state you're in. You kind of backdoor it. And so California does have some pretty cool things like that. So let's kind of dive in, though. I mean, obviously, this is an expert witness show, and we're piping in here to the pre-lit community. Both of you guys are in my pre-litigation training course. Ali, you've been in probably about a year or so, and I know you come full on, drink the Kool-Aid, and love what we do. And I mean, but really, what we talk about is not rocket science. We talk about Metro 2 is an industry standard for accuracy, so you can actually pin them up against the wall with their own standard. We talk about using power of attorneys and not pretending to be the client. You can actually stand out there and run an open and transparent business. And the third thing we talk about is that you can absolutely dispute with furnishers, and a lot of people kind of have this, I don't know, fear, but this preconceived idea that you can't dispute with furnishers because there's a teeny little carve out in the FCRA that says that, furnishers can kick a dispute if it comes from a credit repair company. But I mean, really, the whole spirit of that is like, if they're receiving all these letters that they know are totally bogus, there's no POA. I mean, they look completely like, some crazy guy just sent it out of his dumpster. They can throw it in the garbage can and technically have that little loophole. But I mean, if you're doing things legitimately for your clients, I mean, you're representing them, you've got a POA. I mean, good luck if one of these institutions wants to ignore you, right? So let's kind of talk a little bit about how you kind of couple the whole pre-lit thing and how does that fit in, to your business model? Because you were doing what you were doing, even before I started the training course. And when you plugged into that, it really just kind of fit perfectly into it. So how do you kind of combine those things?
Yeah. So the pre-lit thing, man, like I've been, we haven't done as many of those because recently, like we've just had a tremendous amount of, inquiries where people are like, hey, I have this issue. I don't want to waste any time. Go for the jugular. Right. So we haven't like gone too far back and forth with it. But that's, but the fact is I'm extending my operations and that's something that needs to happen because I feel like what you're doing with at the pre-lit level, like, is just amazing because that's something that I looked at even prior to that, like this whole idea of like the inconsistent reporting across the 3 credit bureaus and so forth, right? And you've taken it to another level where you're looking at like the tiniest details of how the information is, kept on the credit report as such. But to answer your question, one thing that we, when we get these creditors online, one thing that we could basically make, in small claims, the case that, okay, you reported me late in January for an account on one credit bureau. On the other credit bureau, you reported me late for February. And for underwriting purposes, when I go apply for a mortgage, it's looking at as 2 separate late payments or whatnot. So to the extent of that, like in small claims, if you end up going to the judge, and I've had clients that have made those arguments that, hey, this small little thing is not like matching up and so forth, right? And it's really interesting to see what the judge basically says because it really depends on that person, really, at that particular point, and how, you're getting a, consumer friendly judge or are you getting a judge that's, business friendly. That's a lot got to do with it. I'll give you an example. I had this client of mine. Here's what it is. She had a $10,000 water filtration system, that was put on her credit report where she's like, hey, this person, the institution didn't, tell me about this. There was no contractual agreement signed, this, that, the other. So she shows up to court and the judge is like, yeah, I see this on my credit report, but show me damages. I'm like, well, what other damages should we show you aside from the fact that there's a $10,000 charge off, which shouldn't be there. And the creditor is not here to defend themselves even, right? They didn't show up. And the guy's like, well, the judge says that we can't give you, any damages based on this because I don't know, you haven't proved damages,
Wow.
And I'm like, the client basically tells me this. And so she had to go get a letter from the mortgage company stating that, she can, get approved for mortgage. But to some other judges, I've had cases where that's a slam dunk. Creditor didn't show up. There's no contract for this particular debt and what have you, right off the bat, you get $5,000, $6,000, whatever it may be. So it's what's kind of frustrating about small claims is the fact that, it's really, these, the judges could be very inconsistent, but on the contrary, it's also a good thing because these creditors have no idea what they're in for. Right.
Of course, it's not just small claims. I mean, any level of judge, even your upper state level and your federal judges. Yeah. I mean, they're all inconsistent. I mean, you talk to litigators, in fact, in the cases I've been involved in, I mean, it's kind of like the lawyers that represent my clients, the consumers. They want to kind of, they're kind of like, okay, we're going in front of this judge. And so, but then on the flip side, the credit bureaus also, we'll see that they act certain ways based on which judge it's in. Some of them, they just want to kind of drill in and try to get their home run. And some of them, they want to just try to get out as quick as they can, So it's really, there is a whole lot of politics and personality involved with that, which is whole other conversation, but it is relevant. But
Ali,
I think
when the judge is in that particular case, do you remember how much they gave her, or did they give her anything, or after?
It's actually ongoing right now. So the judge said, I'll give you something if you could show me proof from a mortgage company that this is the account that affected you negatively. Here's how much, and if this account was not there, you could get refinanced, and this is how much you could save with that refinanced, right?
Yeah.
Whereas like if I was a judge, I'm like, hey, somebody put a $5,000 collection on my credit report. I should, at least I should give this person $5,000, because the person, the defendant's not there, and there's no contractual agreement that was produced and what have you. So I think
that's a really good point about the damages, because even a lot of the lawyers, like I think Doug, something happened, he'll be back, I'm sure. So even a lot of the lawyers, though, that you and I both know, I mean, the way kind of the FCRA precedents are now is that typically you've got to be able to show damages, but in reality, that's really not very difficult, right? Because if people are coming to us having been adversely affected by something, decline for credit, really all we've got to be able to do is have that adverse action, or even have them go online and apply for something and get declined or adversely affected. So I mean, it's unfortunately, it's a really super important thing is to be able to demonstrate the damages. But fortunately, like if we can kind of learn, okay, like have the little check boxes, right, Ali? Like the things the possible pitfalls. Okay, how do I get the damages checkbox checked? And then, before we start taking future clients, or before to court or to judges, to lawyers, okay, let's get all the damages put together. And even if they go online and they're declined for a credit card, I mean, that is damages, you know what I mean? And so that's something that, luckily, because we're dealing with people with bad credit, if your judge was like, we need damages, you were able to go out and find some damages, no problem there. So interesting stuff. We do have a question coming in, let's see here, from Lashana. And first of all, nice haircut, Stephen. Thank you. I actually got it today. Yeah, I'm thinking I'm looking pretty dapper myself as well. So she's a little tardy to this party, but she's interested to hear about how these experts feel about this. Ooh, that infamous 609 letters. I'll hold my opinion till after you guys. Effective or not so much? Let's see here. Doug Miner, qualified expert witness many, many times over. Section 609. Tell us about, what are your thoughts on that, sir?
As far as, well, what kind of responses are they getting, and then, how is it drafted? I think you have to look at it on an individual basis and see what's happening, and see how, as far as making any more further comments on it.
All right. What about the other part? What do you think about my haircut? Do you think my haircut is pretty good as well? I mean, let's talk about something important anyway.
Yeah, I don't know about the haircut, but like, so from an expert witness standpoint, right? You don't want to answer something unless you actually see what's in front of you.
Gotcha.
I'm not going to deter anybody from doing it without seeing something, right? Fair
enough. That's Doug's subtle way of passing the witness. So let's see, Ali, what do you have to say about that infamous 609? Anything?
Yeah, I mean, like I've. In the past, we've kind of like used them, but I think the question would be like, Doug is probably talking about like how it holds up in court. I'd imagine, right?
Yeah.
But I feel like they can. It's with the credit bureaus. I feel like sometimes it's almost like shooting from the hip, really, when you use these, right? And they could fall either way. But yeah, I think. I had one of the top performing articles on a 609 letter until recently. My web guy changed the goddamn URL. I was getting like 10,000 hits a month on it. So speaking of which, but I mean, like I've not had any kind of like litigation experience with it as such, but we kind of have used that as a second round dispute method and so forth, and it's not always worked, but it does get results here or there.
Well, I agree with you with the bureaus. It is literally like shooting from the hips. And so here's what I've got to say about 609. So 609 in the FCRA is 1681G, and 1681G is not a dispute section of the. It's a section that has to do with disclosures. And so what it actually says is it lets you get your credit file disclosure. So 609 is really the section of the FCRA that allows you to write to the bureaus or call the bureaus and request your credit report when they mail it to you or give it to you with annual credit report or whatever. And so this whole 609 thing, like somewhere along the lines, people kind of thought, hey, we can write to the bureaus and say, you don't have original paperwork, and so therefore this thing's inaccurate. Well, 609 lets you write to the bureaus and request your full file, which is going to be a data file. So the way that you would use that, Lashana, is, and the way you could use it in litigation with these guys, so number one is just understand, I'll say the word technically, even though in reality it's actually not a dispute. But if you do write to the bureaus, and this is what I do, we'll send them and we'll say, hey, give me my full file disclosure. And that is under section 609, your 1681G, you can request your credit file. So you can also do an annual credit report. You can go to their portal, or you can write to them, or you can call them, give me my full report. And when they give it to you, they're going to just give you that standard little template that they give you with all the little holes in the data, and it's going to be missing stuff, and payment histories are missing, and date of first delinquencies are missing. So when you couple that, they did not give you a full file. So you argue they didn't give you the full file because they didn't give you all the data, because we know that they have more data in their database than they give you, but they are supposed to give you the full file. So the way that I would say you could kind of couple that up to your claims is if you send in what is really a 609 letter, which is not disputing anything, but saying, hey, give me my full credit report, and they mail you a report and you look at it and it's missing information, which they're always missing information, then you make the argument that although they mailed you something, they didn't comply with 609 because they didn't give you the full file, because they didn't give you the full history and everything that's supposed to be in there. And you could add that as a claim. So good question. I think 609 may be like going down in history as like the most misunderstood, because you get that guy on YouTube, Al, I'm talking about, whatever his name is, that guy on YouTube.
Reaver.
Like, yeah. I don't even know what he is, but he's like,
it was
that?
Tremendous branding, by the way.
I mean,
I will tell you that,
because, and I'm like, has anybody even read 609?
You're
it's like
absolutely, you're absolutely right about that, right? But everybody's looking for a 609 letter, and I actually wrote an article where I mentioned 609, and it was not a 609 letter, it was just a method of verification letter, right?
Yeah.
But everybody knows that it's 609. Guess what? What's actually trending more is 604. There is no 604 pertaining to that, right? So now there's a 604 letter.
That's for the fraud, to be able to suppress the fraud stuff. Yeah. So anyway, but good question, Lashana, actually. So hopefully that helps you. Feel free to keep them chiming. Let's see what else do we have for you guys. Let's see. So Tim says, oh, well, Tim's always a super fan, man. In fact, he lives here in Dallas with me. So appreciate you, Tim. And also, Tim, let's see, that's awesome. So good stuff there. All right. So, okay, you keep these questions coming. So that's it for the questions right now. So let's kind of jump back in. So Doug Miner, you are our resident, highly overqualified expert witness, and we've got an amazing Ali here. So what do you have to say? What do you have to ask Ali, man? What are you thinking about what he does and how he just whips up on these bad boys and small claims?
Yeah, first and foremost, it's awesome, right? The fact that you're going out there and doing it. There, like we talked about a little bit off air, right? I'm the coaching of the people before they go in there, or if you're helping them out, and then talking, like you talked about, the damages portion of it. And I think it's difficult sometimes to, even from my side of it, right? Sometimes if someone has a long history of bad credit, then the damages are a little bit harder to find, right? But like you brought
Absolutely.
up the issue where you had the mortgage person. Now, when you brought up the mortgage person, I don't know if you guys saw it. I was off the screen there for a bit. So what was it that you got from the mortgage person that made it okay with the judge for the damages? Was it just them writing a letter saying, hey?
Yeah, so basically, yeah, exactly. So basically the judge said, hey, show me how this has affected you. So the mortgage company wrote a letter, that the client forwarded to the judge stating that, hey, this account is basically keeping me from getting refied. If I'm able to refi, this is how much I'll save.
And so I'm curious. Now I'm curious, right? So this is what I do all the time. So if, let's say it was $100 a month,
yes,
right, in his mortgage payment. So did the judge give him $100, or did he give him
the small claims maxes out at 10K, right? So that's where we're at. So we send that in and we'll see what it is. But the damages that the mortgage company put on there, or the difference in payment over a 30-year period for $200 would be, 72 grand
Right.
or whatnot. So
Right.
I wouldn't be surprised if the judge basically gives her 10K.
Yeah.
The problem with small claims often is like there's no injunctive relief. So it's not like we could ask them to remove the account from the credit report. That's what the client really wants. But on the contrary, it is, it does give us leverage where you have a money judgment against the creditor, and then you could say, okay, let's go and talk about getting this item removed from the credit report now that we have a money judgment against you.
There, yeah, you're in such a much better negotiating position once you've done that. I'm just super stoked that your audience gets to see this, Stephen, because I really think what you're doing, Ali, is amazing. Like we talked about, I've done a couple small claims cases myself where I had to file them and get it delivered. And luckily, with my expert witness background, I'm familiar being in a courtroom, right?
Yeah.
But imagining these people, like you said, you have attorneys that are giving them some coaching or some guidance before they go in there.
Yeah.
We kind of touched on it a little bit, but I think what really gets people going about stuff like this is it's like once you tell them how much money you can make, right?
Yeah, absolutely.
And like you made your point for me, sort of saying, look, if it's $200 a month and it's 30 years and it's 72 grand, well, yeah, is somebody willing to pay you $1,500 or $3,000 to get this fixed if it saves them 72 grand?
Mm-hmm. Absolutely. Yeah, exactly.
And you're in a stronger position to clean up their credit report as well. So I'm amazed and just super stoked that everybody gets to hear about it. I just want to. I'm curious as to like how in your mind, what's the formula in your brain where it says, okay, this one is worth X amount of dollars, where this one's worth X amount more?
Yeah. So I mean, my average price point is between, actually, like on every file is between $2,000 to $5,000 roughly, on whatever I'm doing, right? So it may be, so this, I think, and this is a space where, I tell a lot of my, credit repair colleagues as well too, to come into this particular space where you have, first you have the Lexingtons of the world that don't do much, right? Then, you have folks like us that are in the pre-lit group that we're taking on, lower to mid-income folks, right? That have multiple accounts on the credit report. And then, because then over there, it's a battle of attrition, right? You basically go ahead and tackle a lot of accounts, try to get as much off as you possibly can, and you hopefully move the needle from C credit. You may be able to get them to B credit, right? They have 20 negative accounts, you can get them down to 10, fine. But then there are these folks that, are trying to get approved for a mortgage, or they've got perfect credit and they have one late payment that came on, or one charge off that came on somehow or the other, and they're financial upper income, middle income plus folks, and that have very, very strong motivations to get approved for something. So the clients that I normally go after are folks which are, middle income plus upper income folks, where they're trying to get a mortgage, they're trying to get a business loan, and there's something at stake here, which, if removed, that basically gets them over the edge, right? To them, they don't need to worry about, oh, I'm spending $2,000 to $4,000 on credit repair. They're saying I'm spending $2,000 to $4,000 and I get approved for this house, which I can't get approved for otherwise.
Right.
Yeah, I mean, you mentioned like business loans. I mean, and I mean, so I mean, you're talking a little bit higher stakes, maybe a $500,000 mortgage, or maybe a couple $100,000 business line of credit. I mean, these people,
or even I have a client of mine that can get approved for a $150,000 loan. That person will spend $2,000-3,000 on credit repair if that's the only thing that's keeping them as such. So
but that's not the reason. Even if people charge month to month, I mean, if you're charging $250 a month, which is not an unreasonable thing, and somebody's with you for 6 months, I mean, you're still in the same ballpark. And so let's talk a little bit. Okay, kind of so you operate as a CRO, and your license as a credit repair company and everything like that. And really, this is just kind of a glorified pay for deletion model, essentially, right? I mean, so because you're saying, hey, my average client's worth $2,000 to $5,000, but really, let's talk about how you actually weave this into working, as a licensed CRO. So they come on board, it's like a full pay for deletion contract, and whether you can get it deleted pre-lit or whether you actually have to take them into small claims. Like the small claims is just an extra part of your pay for deletion model. Let's talk a little bit about how does that work for you.
So so basically somebody comes in. The first thing that I do is like I'll always try to Zoom with my clients through FaceTime. And I'll give them about 20-30 minutes of my time. And my angle always is I used to be a mortgage broker and I used to do auto loan financing. So I understand the financing world really, really well because I've actually been the guy that's hung the paper as well. So when somebody comes in, I'm like, yeah, sure. Before we talk about the credit, I basically talk about like, why is this important in the first place, right? At the end of the day, credit's basically something that, that will get you to where you need to be, but what is your motivation? And that's the only thing I'm concerned about finding out from you. So most clients will say, I'm trying to get a loan, I'm trying to get this, I'm trying to get that. And then I'll ask them their income information, figure out what their financial position is. And then I'll say, okay, based on this, here's what your goal is. Here's what we need to do to get you that particular goal. And when somebody comes to me, it's interesting when somebody comes to me for credit restoration and they haven't gone to a mortgage broker, I already have what FHA qualifications are, the criteria. So I'm like, oh, your score is here. Here's what you'll qualify for. So all of a sudden they're really giddy. It's like, oh, this guy is just not willing to, he's not here to make a quick buck off just repaying the credit. He wants me to get approved for this particular loan. So that brings a lot of credibility for the business. And we're saying that, hey, you spend X amount of money so that way you could achieve your goal. And we already know the milestones of what that goal is, which they may not have even thought of before at that particular point.
Al,
so
it sounds really familiar to my story, right? I spent 24 years in mortgage lending, right?
Okay.
And then my dad did it since I was 5. So I was around it essentially my whole life. And then, well, since Ali, you've been around it, my neighbor and friend was Angelo Mazzillo.
Oh shit! Is he? Wow!
Well,
that guy is a legend, man. Jesus.
Yeah,
that 10 of his.
For those guys who don't know who the infamous Angelo Mazzillo is, he was the founder of Countrywide Mortgage and probably single-handedly responsible for taking down the economy in 2008. And so,
Stop it right there. Stop. You can't say stuff like that.
What do you mean I can't say stuff like that? Of course I can say stuff like that, man. They would take these loans and package them up and take the non-conforming garbage and put them in. I mean, I know people that work for Countrywide, and they told me that. They were like, dude, the stuff that we would package up and sell, we can't believe
everybody was doing it, man. That's the thing.
Everybody wasn't just everybody did.
Now he's one of the guys that made out the most. That's one thing because he sold out quickly, not unlike the Lehman guy, right? Who basically got screwed in the deal. But if he could get away with it, he would too.
Yeah, that's right. By the way, like on South Park, all names, basically if they represent reality, it's just a coincidence. So anyway, that's the actual legal disclaimer as we talk about these people here. So, all right, let's see here. We got Marianne likes what we talked about here. Go ahead, guys.
I have the same experience that you've had, Ali. Very similar in the sense that when you're actually talking to a credit repair client about these sorts of things, and the underwriting guidelines, whether, like you say, it's FHA, VA, hard money, Fannie Mae, Freddie, whatever, some portfolio product, whatever it is, and there's this end point or this desired outcome that changes their life in a way, meaning they have a house or they're saving the $200 or $500 a month, whatever it is, or even a cash out refi where now they've got an extra 50 or 100 grand to go do whatever they want to do with it, right? So coming into it that same way, but one of the things, and we've talked about this in the past with Steven, when you talk about standard practices and when you talk about mortgage lending, what I run into as an expert in these cases that I work on is I have to overcome or I have to explain that, let's say, Ali, somebody comes to you when you were in the mortgage business and the guy walks in your office and you're the loan officer and he says, yeah, man, I really want to buy this house, but I have this, judgment, or I have these late payments that are showing up, or this, whatever it is, whatever the credit problem is, it's going to keep them from getting approved. And that, do you go any further? The answer is you tell them, no, man, sorry, there's no need to go any further so you don't fill out the loan application and you don't run the credit, or maybe you run the credit, but just to confirm what they told you. Like, I'm just wondering, how did I know how I handled those situations. I'm curious as to how you handled them, and then how you translated that into credit repair. Or did you
Basically, yeah, I mean, that's exactly how I got into the credit repair, right? My uncle used to own a mortgage. He was a mortgage banker. I was running his office, and he's like, listen, we have these clients and we don't want to let them go. Learn credit repair. This is like 20 years ago.
Yep.
So anything that came to our, anything that came to our office, we're like, this is gold. Like, if there is a way, we'll find it to make it happen. Whereas most of these mortgage guys, they're like, hey, this is done. We can't get you done, and speak to a credit repair person and so forth. And in coming to that, like, I think one other thing that I actually do myself, kind of bringing this full circle, is I've got partnership with mortgage companies. So the moment somebody says they're trying to get a mortgage, I'm like, do you have a mortgage broker? Because right now we need to get a mortgage guy on your team right now, because the fact is, what we don't want to do is work on your credit for 4 or 5 months and fix XYZ problems, and later on find out that there's another issue which can get you approved, maybe income or this or that, right? So when they feel like, my process with them is that we just create your team on day one, and then they're locked in. The mortgage guy basically, makes money off it. He's a good, referral partner. He pays you a marketing fee and so forth. And like, everybody's happy, and the client's like really gelled in, because now all of a sudden you fixed a huge problem for them. Because before they were thinking, I got to get my credit repair. Now I got to figure out this loan thing. But if because most loan officers won't talk to them, and they get shunned away. Like, you got bad credit, get lost.
Right.
And these people are looking for a home.
I think, Ali, so I came into it almost very, very similar, and in the same ways, exactly doing the same thing. But I'm going to add on another layer that I think I want to add to, let's say, all these people out there who do credit repair. And, yes, having relationships with mortgage professionals, all that stuff works. And you take that client, you nurture it, you fix it, and you send it back to the mortgage person, right? What I would do back in the day was, I had a relationship with property management firms, right? And so think about it this way. Property management firm, let's say there's 100 or 1,000 properties that they're managing, and they're running credit reports almost every day, right? For people wanting to rent. And so maybe they can't rent, or maybe they can only rent, but they can't buy a house. But if you have a relationship with property management firm, and they say, oh, this person has X, at 640, we can get them for rent. They got to pay an extra $100 a month because of their low credit, right?
Right. Yeah.
But all of those people, especially Ali, you're going to get this. You and I are going to get this probably more than most, in the sense of how expensive it is to rent a home in Southern California, it's outrageous, right? So you have somebody who's renting an apartment for $3,000 a month, and they can afford to buy a house, and they need the tax benefits. And so if you set up relationships with property management firms, you're going to get, whether it's 50 or 100 new credit repair clients a month. And all of those people that you fix up, now you're going to get them to the mortgage broker. And when their lease runs out, your mortgage broker is going to love you. So absolutely.
That's why you're a genius, Doug. That's where you're making the big bucks, buddy. Yeah. Living on the beach, surfing.
Yeah.
On a weekday. I can't afford to do that, man.
He's over there in the golf course next to Angelo. But let's see. It looks like Marianne says also Florida. Yep, Southern Florida's got some hellacious land prices as well and stuff. So, all right, Ali. So let's kind of talk about all the folks listening here who are in California, because we've got quite a few folks here in our community that are in CROs, that are in Cali. How can you partner with other CRO companies as on a referral basis and stuff? I mean, do you do that, or do you not do that? I mean, how can
I'm open to it right now. We get more business than we can handle. But if somebody's got a client who's got a very specific need, and I'm very, very selective of who I partner with as well too, because a lot of times people call me and say, well, you just fix the credit and let us deal with the client ourselves, right? And don't talk to the client. I'm like, no, that's not going to happen. Sorry, I need to actually know who this client is, what the story is, and so forth, and what have you. But yeah, I mean, if somebody's transparent and really wants us to help out, we'll if there's a way, we definitely can.
So,
But
go ahead.
But one other thing that I'll also bring up with me too is like one thing that I'll talk about, like the the pay for delete model. What it's really done for me is like it you know just because we're so confident of our success rate, right? There's certain creditors have a 70-80% success rate. Certain ones have a lesser success rate, right? And our fee structure changes based on what our perceived success rate for that particular creditor is, right? So if you have, say, XYZ Bank, and we know we're running an 80% success rate with them, going this, small claims process and so forth, that, my fee for them would be $1,500 to $1,800. Whereas like some creditor that fights back really hard and they're able to show up small claims and so forth, my fee may end up being double that for that particular client. But having said that, I think what people I think one suggestion that I'd actually make to the community is that every creditor has different protocols. They act differently. They have very different internal policies as well too. And what's really helped me is to figure out what creditor responds to what. And I'll give you an example. For instance, right? Capital One, for instance, has an issue. I had a client yesterday who's a frontline worker and whatnot, had a late payment during COVID, and Capital One Bank, didn't agree to remove the late payment for her. So she called us, we basically called her on her behalf, spoke to a supervisor, elevated up the chain of command and so forth and what have you, got the late payment removed, right? We know, and that's very important data that works with Capital One. The same thing does not work with Chase. And I think, data is really, really important in whatever that we're doing, especially, to understand what a creditor will respond to and what works with them. So for me, a lot of what I do, depends on, yes, what the story is and also who the creditor is, and based on my past experience with them. Are they a green light creditor where everything flies with them, or they're a yellow light creditor where they put up a fight, or they're a red light creditor where they will fight everything till, their kids basically turn over in their graves.
Well, and this is a really good point, and we've got another question that's really relevant timing here that I'm going to pop up in a second. But what you're saying really just epitomizes the whole pre-lit concept, which is, you understand the opponent. You're not just like firing out letters like in the consumer's name, deceiving these people with no power of attorney, making it look like it came from the consumer when it came from a credit repair shop. Your opponent, you've got a good database, you've put together who they are and how they act. And you said you got on a call with them the other day. You legitimately talked to these people, right? And that really is the essence of the pre-litigation thing. If you can get the confidence to really just act as if we can run legitimate businesses like anything else out there. Not saying that there's a lot of folks that are illegitimate, but the point is if we've got to hide behind these letters that like, oh my gosh, it's got to look like it came from the consumer. Where that came from and how it started and how it became an industry standard, I have no idea. But, what you're saying is like, you're building a case, and you understand who you're dealing with, and you even got the percentages and the ratios, and that's really powerful stuff. And actually, that kind of ties us to, we've got a question from Lashana that she posted up here. So, brief us on the general steps we can take to ensure that we are proactively creating a paper trail or documentation that would hold up in court. What items can prove quote unquote damages? Any general insight would be appreciated. Yeah, and I was actually going to kind of go right there. So it's perfect timing, Lashana, because I was going to, ask you like for the folks watching, if they're like, okay, I want to do what Ali does, and I want to get licensed in California. I want to be able to go to small claims court, but how do I paper this thing up? What do I ask for in the challenges and stuff? So let's kind of talk a little bit about that. What are the disputes, quote unquote, disputing something. What do they look like? What are you asking for? And then how do you package that thing up and couple it up with the damages, Ali?
Yeah, so that really ends up becoming, I get a better idea of that once, there's a client interview and they will pretty much tell you what's going on, right? What the lender has done wrong and so forth. And yes, as a CRO, you could look at the credit report and see, what violations are there. Vis-a-vis Metro 2. And yes, you're not going to say this is, Metro 2, you're going to say this is negligence and so forth and what have you, right? But it really, I think there's no template for that. Now, the damages are, I think we went over that as well too, is that in small claims, it just could be something as simple as something inaccurate on your credit report, or a judge may say, hey, no, I want to see something along the lines of something from a mortgage lender stating this account kept you getting approved from this particular item. So having said that, it's like you just have to go with what you have. And sometimes you don't have that kind of proof, but doesn't, and it works sometimes. Where and other times it doesn't really. So that's kind of like one thing about in the small claims process is that you don't really know what judge that you'll get, and they and even as to what they allow in court and what they accept as damages is so darn arbitrary.
Yeah.
Hey, Ali, do you ever?
Yeah.
I'm listening to you, and I'm going to think out loud and ask a question at the same time. It's like, when you're talking about damages and proving it, and we went over this about the mortgage broker, I'm thinking to myself, with your background, right, whether it was a mortgage or whether it was an auto loan, whatever fits your back, would you ever act as the expert and draft a letter?
Yes.
Yeah, okay. All right.
Absolutely. Sorry. And thank you for bringing that up.
You got to hire me.
Yeah.
He's not only the junior faux plaintiff attorney, but he's also the expert. He's like the judge, jury, and executioner all in one, man. I love it. So it's awesome stuff. But let's back up for a quick second, Ali. You kind of just steamrolled over something, but I think it's super important. So you were like, well, we're not really going to like sue him for Metro 2, but we'll sue him for negligence. But let's back up for a second and frame this thing up again. So what credit bureaus do is they tell stories about people, right? And we have a basic principle in this country where you can tell a truthful story, but if it skews on untruthfulness, then you open yourself up to defamation and negligence, which is where you're coming in. Now, FCRA was designed to basically create a statutory framework that takes away your ability to sue for negligence and defamation, but you're finding a way to angle that in small claims court. But you were like, well, we don't really argue Metro 2, but we argue negligence, defamation, that kind of thing. But when you're setting into dispute, so first of all, do you dispute with the bureaus and the furnishers in general, or like who do you dispute?
In California, there's in California we also have the CCRA, by the way, where you don't really have to dispute prior to actually have a right of action.
So is the CCRA, is that the Rosenthal? Is that your debt collector act?
No, the California Credit Reporting Agencies Act.
Okay, all right. So you've got the state version of the FCRA, and then you've got your Rosenthal, which is the state version of the FTC. Yeah,
exactly. So, so having said that, I mean, we're not even going to, this is small claims, and as far as the FCRA is concerned, a judge couldn't care less about this, right? In small claims, they're like, is this fair or unfair, right? And they're just trying to see how has this affected you. So I've actually there's another law around restrictive endorsements in California. California is one of the only states one of the 4 or 5 states where you could write a creditor a restrictive endorsement check. And on the restrictive endorsement, you could basically state that, hey, if you cash this check, this cancels all prior agreements between us and so forth. And the new agreement is that you'll delete the account from the credit report, right? Now, we had a client of ours that took that restrictive endorsement check to court, and there is a California civil court that provides for that basically recognizes that as a bona fide contract, right? And the client went in there and cited this California civil code, and the judge is like, judge was not interested in hearing it. So now that would have been different if it had gone to actual state court, but as far as the judge is concerned, yes, it was California law. So I feel like they'll take the same approach with FCRA. They're just not going to be interested, right? They'll just be interested in what makes sense to me as the adjudicator here.
So you use a lot of California law, and for what I'm hearing,
I've tried to, but even then, the judges sometimes even disregard California law. They're just going based on what they feel.
Let me break that. Forget about the judges just shooting from the hip, because we know that that's what they do.
Yeah.
They usually don't aim at you if you pay for their re-election campaigns. But my point is forget about the judges.
Yeah.
Again, we're joking here. This is family entertainment. But What I'm saying though is you're not really using federal statutes, you're using California statutes.
Not at all. Yeah.
In the big boy world, if we were to talk to a whole bunch of attorneys, they generally are like, we don't like state laws because all these things you're doing are preempted. But you've kind of found, what I find the most fascinating is you've actually found an effective business model. Number one, is a legal non-lawyer in California to use state laws, which really basically cover issues that are predominantly preempted by federal laws, and you're able to actually make this thing work. I mean, honestly, like, that's what I find to be most intriguing about this whole thing. Doug, what are your thoughts on that?
That it's intriguing, sure. The one thing that pops in my head though, Ali, listening to all this, is like, has it ever come up to utilize, let's say, a breach of contract?
I do that too. Yeah. We've done that too.
Okay. So, I don't know, negligence and
negligence, defamation, deceptive business practices. The thing is, like, what we try to do is keep it really, failure to perform fiduciary duty. So we want to keep it really broad and general until it actually gets in front of the judge, and that's kind of like how the attorney that helps me draft what he does is I'm not able to advise the client that, hey, here's what you should do, here's what you should argue. But, the attorney that I have that I work in conjunction with basically gives me the template that, hey, just put that within this parameter and it goes through. And we, because if we become too technical, like I said, Stephen said about, federal court, businesses, they love to move stuff to federal court. So anytime there's, mention of FCRA and CCRA, they'll try to move, the case, and you're out of small claims, and they're basically home free. So, I'm not going to be in the small claims suit the way it's drafted. It's not very technical, but we will try to subpoena them for a lot of stuff.
Yeah. So we've got Sam. So going back kind of a few minutes ago, he said you had mentioned the Capital One removal. Do you have any insight on Capital One Empire?
yeah, absolutely. So let me just talk about late payment removals as such too, because that's something that, that's actually what, that used to be our bread and butter for a long time until small claims came into view. So with just in general in small claims, what I'd like to share is that every creditor has different regulations, has different guidelines on how they approach late payment removals, right? And I'm just talking of a 30, 60, or one-time 90, right? I'm not talking about like bunch of scattered lates.
Train wreck. You don't clean
exactly,
up.
Right.
You're not the hazmat crew going in to clean the train wreck up, huh?
Exactly.
Just a little oil spill right there, you're going to mop it up, huh?
Exactly, right? So if somebody comes to you and they can't get approved for a mortgage, they have a 30-day or 60-day late payment. Capital One normally has a policy. If it happened during the pandemic, if you could get a supervisor involved, they could make a business decision on the phone. Chase, on the other hand, will not, right? With Chase is like, we have to do something really, really extreme to get their attention. I had a client of mine who was basically quarantined in a darn U.S. submarine at the time COVID hit, right? And he basically sent Chase proof that the Department of Defense had him quarantined in this goddamn nuclear sub, right? And that was provided to Chase, and Chase said, "Go pound sand, we don't care."
Well, I mean, you say you've got to do something drastic to catch Chase's attention. Are you kind of like the guy that sends the white powder anthrax envelope in the mail to Chase? Are you the guy that sent that over to Jamie Dimon? Again, all the names here, if they resemble reality.
I will tell you, like, Chase is probably like one of the most conservative banks they are, and no matter what, they don't like deleting anything. And whatnot, and I think the attorneys know the same thing too. It's like you fight Chase, you sue Chase, they will fight it until the cows come home, and on top of that, you'll get very little money out of them as well too. But just going to the late payments, like I just want to share this one thing with you guys, is that there's certain creditors, if you could show any external circumstances that led to the late payment, like you have a letter from your disability attorney, you have a letter from your CPA that they were responsible for making the payment and they didn't, or you have some proof that you were hospitalized and a doctor's notice or whatever it may be. A lot of these creditors will remove a 30, 60, or 90 based on that. As long as they could call and verify the authenticity of that letter. That's the key. You can't just make a letter up and send it, because there are a lot of people that have been doing it.
Take all the fun out of it. I mean, we can't violate.
I know we
deceptive
no.
decisions. So let's talk. I'll just kid aside about that real quick, because that's like some freaking gold nuggets right there. So will you pack? So you obviously, again, you know your opponent, you know, so you know who will do what within a certain reason. Will you package up, go to your consumer and say, okay, you've got XYZ creditor, and so we need a letter from, you know, whatever. And you package it up and send it to them, to a certain person? Do you call them up and then fax it? Like, what's your standard delivery for these folks to
So I will tell you this, like what I try to do is I'll basically, you know, call in, find out what is the procedure internally for them, right, with this. Sometimes they'll say, you know, fax it to our credit bureau department here, or sometimes they'll say write to this particular address, right? With TD Bank, you have to write in. With Nordstrom's, I believe you have to write in as well too. With Capital One, you could fax it in.
Gotcha. So it's kind of across the board. I mean,
exactly. Exactly. So you have to figure out like what the, you know, how the process works with that particular creditor and whatnot. And this ends up being, you know, really helpful once you have all the data as to who does what. Because sometimes, you know, you're going to get frustrated with a lot of creditors, because my team is like, well, goodwills don't work. I'm like, don't tell me goodwills don't work. You know, tell me that it doesn't work with this particular creditor, you know, because you guys should know better. It's basically on a case-by-case basis. It's basically, you know, based on what do you have. Now, Capital One removes something just because you mentioned COVID and they don't want any proof, right? But you're dealing with Honda, they'll want some kind of proof. You know,
they want you're dealing with, you were in the submarine, you know.
Well, they'll want that proof, right? And Capital One will say, Chase will say, send us this, and they'll say, why? I will wipe our ass with it. So, so just
that restrictive endorsement, man. You definitely freaking. You got Mary Ann says she's got that restrictive endorsement stamp, and Tamara says it works. We use that in the past and stuff. You really struck some nerves with that restrictive endorsement thing. So you've got some. Oh, let's see, we got Barclays. Okay, so let's talk about Barclays real quick. Okay, man, look at that. You're getting some feedback here, Ali. So what's the skinny on Barclays for removing a 30?
Oh, by the way, let me just kind of like circle back with Barclays. They're a tougher creditor than Capital One is. What my process is, if I basically send them a packet and say, hey, here's why the client was late, here's proof that they had sufficient funds and so forth and what have you, you know, then what we do is we elevate it up to the CFPB. Somebody from executive authority, somebody from executive reaches out, then we'll talk to that person and say, hey, did you guys look at this packet that was sent initially and make a determination? One thing is, the easiest thing actually is with most creditors, and tells me about the last deletion that we had with Barclays, that anytime you have an annual fee that comes on that led to the late payment, that's going to be always very, very easy to remove with the CFPB. Pretty much 95% of creditors will remove an annual fee related late payment, you know, with a CFPB complaint that I found. But yeah, so just to give you, will a restrictive endorsement work in New York? I think the restrictive endorsement laws are only in 3 or 4 states. I'm not sure if New York is one of them. California, I do know for sure it isn't one of them. But then again, you know, also the thing with the restrictive endorsement is who's the creditor you're dealing with. Some creditors may not care about state law, and they're like, okay, you know, this is something that we fold on.
You forget about states' rights. We're going to go to the United States. Right? Oh man, so let's see. All right, so Sam also, client provided a positive COVID test sent to Barclays, but they won't budge. So how do you feel about that one, Ali?
Yeah, good question. I mean, I would basically, you know, go make. I think Shiva's making the argument on. You know, Shiva's a mutual friend of ours, an attorney that we know for everybody listening. But he's making an argument on COVID-related lates, and he's basically saying that if the creditor went ahead and issued the client a refund for the late payment fee, then that means that technically they gave the client COVID relief, right? And then they have to remove the late payment. as well too.
Yeah.
So
Nice.
one thing would be is to call Barclays up and say, hey, please, refund me the late payment fee and so forth and what have you, and then maybe file a CFPB and say, hey, you guys gave me relief during COVID and so forth, and should apply to the late payment and see kind of like where that goes. But yeah,
If they
Barclays is
still
going to be
do
a
it,
problem.
just mail them the COVID. Just send them the white anthrax and the COVID all together. That'll teach them not to acquiesce to Ali's.
Oh yeah,
dispute.
absolutely.
Let's see, Benjamin.
Hey, Ali, when you're subpoenaing documents and so forth, do they ever make you sign a protective order?
Never had that.
Never had that come up. Okay, interesting.
Yeah.
I just thought
Ali gets the best.
I wanted
Ali
to know
gets
that.
like the best. But go ahead. Yeah.
Well, it comes up in the work I do where I have to sign them. Right? When you're dealing with these big corporations a lot, sometimes they'll make you sign stuff like that.
Well, the thing is that they normally have to show up to court with it, right? There's just one hearing.
Yeah.
So that's pretty much it. So I'm not sure. Most of their attorneys would be privy to it, but who's coming to court is is an employee or a paralegal, and whatnot. So they may, so before they bring something in, it's not like you're going back and forth during discovery, right?
Yeah.
They go to the court date, they just have to show up with the stuff. So that's about it.
Ali's got the best of all worlds. Number one is he can do preempted things and not get it preempted, and then he's not like a lawyer, so he's not bound to their code of ethics, and he just gets to do all these cool things. He's basically found like the perfect niche. Like, you know what I mean? Like you found that. Like you're like the payday lender of credit repair guys. They found that little niche where they can go and charge like 8,000% interest. You kind of found like where you could just go straight into the California, municipal court and just freaking go gangster on these people, man.
And one thing also is that, it's really, really important to make sure that not to dispute anything that's within the statute of limitations that has a high amount, right? Because what you don't want is your client getting countersued for that $8,000 debt that's within the statute. And whatnot. But so I'm also looking at who the creditor is, what the situation is, and is the debt still something that could be legally collected upon or not, if it's like an unpaid debt, that is.
Good stuff. So as we kind of wrap this one up, if there was one takeaway for all the CROs, I guess, especially the ones with California clients, like if there was one takeaway from the burn the name Ali in their mind, like if they're like, man, I've got this particular thing and who's my secret weapon? Oh, I need to contact Ali. Like what would be the one thing that, people, like if they're a CRO and they want to maybe refer a client to you, what should they remember about you as a specific niche?
It could be something, I would say, like, because of the fact that our price point is high, like it needs to be somebody who's really motivated. You have a client that has a lot on the line because of that particular item, right? Or two items or whatever it may be, right? I'm not a good fit for somebody who already has 10, 12 accounts and so forth, and we're trying to move the bucket, we're trying to move the needle, and getting one or two of these accounts don't really help out that much. So if you have a client who, is being hampered by one or two accounts and they've tried everything in town, we're kind of like the nuclear button, as it may be, right? That's what you'll use us for.
Good stuff. And Doug, as we're wrapping up, what are your wrap up thoughts on all this from your expert perspective?
Yeah, I see. Well, heck, if Ali wanted to do it, he'd be great at it. First and foremost. Secondly, I think him utilizing his expertise in these different areas and his background, right, to help out these clients. And like on other shows, I always encourage people, we all came into this stuff from different backgrounds. So Ali's found a really cool and unique way to utilize his background and make good money and help people at the same time. So I got nothing but praise for him. This is the first time I've ever met him. It's just amazing. It's awesome.
We got to get out of the water, brother.
Yeah, for sure.
Ali, you'll probably be getting some sort of a request from Doug in the near future to write him an expert report from his expert reports, like a supplement, I think is what they call that. So how can folks get in touch with you, Ali? What's your email and number? And
my email is ali@imaxcredit. The website's imaxcredit.com. So anytime, I'm open to chat to anybody, and help them and so forth. And if they're curious about the process, and because, you've got a great community of folks, and I think everybody's, got the head on right, and you're telling them the right things. I feel really strongly about, sharing the knowledge that I have. And this is actually the first time I've actually spoken about small claims anywhere. I actually don't really, because
I mean, it's what it's all about is sharing it. So, we've got Ali, ALI at IMAX, IMAX, like the theater, except you're cooler than the theater.
Yeah, IMAX credit.com.
All right, Ali at IMAXcredit.com. Blow him up. And Doug, why and how should people get in touch with you, sir?
Why, anytime you need to ask some questions, and easy enough, Doug at dougminor.com.
Doug Minor, DOUGMINOR.com. And if you're interested in talking about becoming an expert, Doug has been in lots and lots and lots of cases. And so let's see here. Gracias. Okay, that is awesome. So feel free to reach out to Doug. And of course, if you want to check out the pre-litigation training that we do, go to creditrepairtrainingcourse.com. We'll give you a 30-day free trial, $99 a month. Both of these esteemed, I got to point that way. Both of these esteemed gentlemen are in there. And so if you're looking to sharpen your tools, check out creditrepairtrainingcourse.com. And that being said, let's see here. We got, the love just keeps on coming in. Thank you, Doug. Well, Marianne, you're not thankful for Ali? I mean, what's up with that? So, but that being said, I think she meant to say thank you, Doug and Alex. And I appreciate you guys, and I appreciate all of y'all out there watching and being part of the community. And we will see all of you back, same time, same place, next time. You guys be good.
Oh, thanks.
Take care, guys.